Welcome to DollarDrip by Series Elon Nick. Imagine this. One day you open your investment account and staring back at you is a six-figure balance. $100,000. For most people, that number feels almost impossible. But here's the truth. Your first $100,000 isn't built by luck. It isn't built by finding the next Tesla. And it definitely isn't built overnight. It's built through consistency, patience, and a simple investing strategy that almost anyone can follow. In today's video, I'll show you exactly how ordinary people can build a $100,000 investment portfolio, even if they're starting with very little money. So, let's get started. Why the first $100,000 is the hardest. You've probably heard people say, the first $100,000 is the hardest. And they're absolutely right. In the beginning, your own savings do almost all the work. Your investment returns are still relatively small. But as your portfolio grows, something incredible begins to happen. Compound interest starts working harder than you do. Eventually, your investments begin earning more money than your monthly contributions. And that's the moment when real wealth starts accelerating. Step 1. Invest every month. The biggest mistake beginners make is waiting for the perfect time. They wait for the market to crash. They wait for interest rates to fall. They wait until they have more money. And before they realize it, months turn into years, and nothing happens. Successful investors don't wait. They invest consistently, every paycheck, every month. No matter what the headlines say, even small investments make a difference. $200 every month. $500 every month. $1,000 every month. The exact amount matters far less than building the habit. Because in investing, consistency always beats perfection. Step 2. Automate everything. Want to know one of the easiest ways to build wealth? Remove emotions from the process. Set up automatic investing. The money leaves your checking account before you even have the chance to spend it. No guessing. No trying to time the market. No excuses. Automation turns investing from a decision into a habit. And habits are what build wealth. Step 3. Buy low-cost index funds. You don't need to pick winning stocks. In fact, most professional fund managers fail to beat the market over long periods of time. So instead of trying to beat the market, own the market. Low-cost index funds give you instant diversification. Hundreds of companies, a single investment, lower risk, lower fees, and for most investors, better long-term results. Sometimes, the simplest strategy is also the smartest. Step 4. Ignore market crashes. Every investor experiences bear markets. Every single one. Markets fall. News channels panic. People rush to sell. But then, eventually, the market recovers. History has repeated this pattern again and again. For decades, the investors who become wealthy aren't the ones who avoid market crashes. They're the ones who keep investing during them, because temporary declines often become long-term opportunities. Step 5. Increase your investments every year. Here's a simple secret that many people overlook. Don't just invest consistently. Increase your investments over time. Did you get a raise? Increase your monthly contribution. Received a bonus? Invest part of it. Finally paid off a car loan? Redirect that same payment straight into your investments. Lifestyle inflation destroys wealth. Investment inflation builds it. Step 6. Reinvest your dividends. When companies pay dividends, don't spend them. Reinvest them. Those dividends buy more shares. Those additional shares generate even more dividends. That's compound growth, working exactly as it's supposed to. At first, the progress feels slow, but over years, and especially over decades, the results become incredibly powerful. Step 7. Stay invested for the long term. The market rewards patience, not prediction. Investors who constantly buy and sell usually underperform, but investors who stay invested through both good times and bad, often achieve the best long-term results. Remember this: time in the market almost always beats timing the market. Final thoughts: building a $100,000 investment portfolio isn't about being a genius. It's about being consistent. Invest every month. Automate your investments. Choose low-cost index funds. Ignore short-term market noise. Increase your contributions whenever possible. Reinvest every dividend. And stay invested for the long haul. Follow this strategy long enough, and one day, you'll open your investment account, look at the balance, and realize you've reached six figures. That first $100,000 changes everything, because after that, compound interest starts doing the heavy lifting. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications so you never miss future videos. Thanks for watching, and I'll see you in the next video. This video only for educational purpose. Thanks for watching this video.